Under single entry system of accounting, both aspects of transactions are not recorded, due to which we are not able to prepare the trial balance. And if you are not having the trial balance, okay, then we can't prepare the final account, means profit and loss account, trading account, balance sheet. Okay, so in case of single entry system, okay, we usually prepare statement of affairs. In place of balance sheet, we prepare statement of affairs to take out a capital at any point of time, and to ascertain the profit we prepare statement and profit and loss. Okay, under single entry system we do not record both the aspect of transaction. When you are not recording both the aspect of transaction, due to which we will not be able to get the accurate values. Okay, in case of double entry system, we used to record both the aspects of transaction. Okay, suppose you are purchasing cash for the when you are purchasing good from someone in cash, so what is the journal entry we pass? The journal entry is purchase account debit to cash account. So both the accounts are getting affected. In purchases, you are writing that goods are coming in, and in from cash, the goods the money is going away. Okay, but under single entry system, both aspect of transaction are not recorded. Okay, so in case of single entry system accounting, to ascertain the net profit, to ascertain the profit, we usually prepare statement of profit and loss, and to get the capital at any point of time, we make statement of affairs. Okay, how to calculate profit? The basic formula to calculate the profit in case of single entry system of accounting is profit is equal to capital at the end of the year plus drawings minus additional capital introduced minus capital in the beginning. Again I am repeating, profit is equal to capital at the end of the year plus drawings minus additional capital introduced minus capital in the beginning. With the basis of this, you will be able to get the net you will be able to get the profit under single entry system of accounting. Now we will be solving few sums from this chapter, and hope you will be getting more clear about this chapter. Based on the chapter single entry system of accounting, okay, we are going to do some sums. Here I can see the first sum. In this sum it is mentioned the following information accounting year is given. Opening capital is rupees 60,000, drawings is 5,000, and capital added during the year is 10,000. Closing capital is 90,000. Calculate profit or loss for the year. Yes. So I said you in this chapter only two things you have to prepare basically. One is statement of affairs, okay, and the other is statement of profit or loss. Okay, statement of affairs is prepared in place of balance sheet. In case of single entry system, we don't prepare balance sheet, we prepare statement of affairs to get a capital at any point of time. And the other thing which we prepare in this chapter is statement of profit or loss for the calculation of profit. Okay, in this we don't do any final accounts, we do statement of profit or loss to prepare to get the profit. Okay, so based on this sum I have done solution. Okay, yes, here we have the solution of the sum. Okay, statement of profit or loss, the formula was what was the formula for this sum? I said in the beginning of the chapter only, profit is equal to capital at the end, add drawings less additional capital introduced less capital at the beginning. This is the formula to calculate profit. In this sum, see, capital at the end of the year was 90,000, drawing was given 5,000, additional capital introduced is 10,000. So capital at the beginning is 60,000. This all information you will be placing, and simply drawings you have to add in the capital at the end. You are getting 95,000. Then you have to minus additional capital introduced in the sum is 10,000, and after that you have to subtract the capital at the beginning, that is 60,000. So ultimately you are getting net profit for the year is 25,000. Now sum number 2. In this sums they have given you capital of the beginning. Okay, capital in the beginning of the year is 70,000. They have given you profit is 20,000, drawings is 7,000. Okay, and he sold Ashok sold his ornament of his wife for 20,000 and introduced the money in the business. Means this is additional capital introduced in the business. Okay, this is additional capital introduced in the business. In this sum you have to find a capital at the end of the year. In this sum you are having net profit, you have to find capital at the end of the year. So how? In the previous sum, okay, we have followed a different format, but in this case what is missing? In this case capital at the end of the year was missing. So in this case the format will be little bit different. Okay, net profit of the year 20,000, capital at the beginning you have to add in the net profit. In net profit you will add the capital at the beginning of the year, that is 70,000. You are getting 90. In that you have to add additional capital introduced, that is 20,000. You are getting 1,10,000. Now from that you have to subtract drawings. Drawings was 7,000. You will get the capital at the end of the year. Now you can see sum number 6. In this sum, Shiv maintains his books of accounts on single entry system. Okay, here you are having two information. One is all the information in the beginning of the year. Other information is of the at the end of the year. This is at the beginning of the year. This is at the end of the year. Okay, in this sum, drawings is given 500 rupees. Depreciation is given and provision for doubtful debt is given. Okay, in this sum, neither you are having the opening capital nor closing capital, nor the capital at end, nor the capital in the beginning. Okay, you are having only drawings. So you have to take out statement. You have to take out profit. For taking out profit, you need both opening capital and closing capital. First, we'll make two statement of affairs in this sum. Okay, then after preparing two statement of affairs, you'll getting both the opening capital and closing capital. With that help, we'll prepare statement of profit and loss. Yes, here you can see calculation of opening capital. For calculating opening capital, I prepared statement of affairs as at 1st April 2021. Furniture value 200, stock 2800, debtors 2100, cash 150. It was mentioned in the question. Sundry creditors 1750. Adding this, I have written the amount both the side, then I have subtracted from this, I have get the balancing figure, that is the opening capital. On this date, I am getting the opening capital. After opening capital, I have drawn statement of affairs, okay, at the end of the year. This is the statement of affairs at the end of the year. Yes, in this sum, now in this part I am taking out calculation of closing capital. Okay, for taking out closing capital, I have drawn the statement of affairs as at 31st March 2022. I have taken furniture. From furniture, I have depreciated 10%. I am getting 180. Stock is given in the question at the end of the 31st March 2022. Debtors less provision for doubtful debt you have to do. You are getting this much. Cash, bills receivable, investment. This side sundry creditors and loan. After that, you will be adding all the asset side amount, writing both the side. You will be subtracting from these two. 7790. When you will subtract from these two, you will be getting the balancing figure, that is the closing capital. After getting closing capital, you have to prepare statement of profit and loss. Okay, capital at the end, you have got 5390 by the statement of affairs. Drawings is mentioned in the question, that is 500. When you will add, you will get 5890. Additional capital introduced in this sum was nil. Okay, that's why I have given blanks. Here I am getting 5890. In this you have to subtract. From this you have to subtract capital in the beginning of the year, that is 3500. You are getting 2390. That is the net profit for the year. Next, sum number 10. In this sum, you are having two information as like previous sum. Okay, few changes which you can see here. Here see, he borrowed, okay, the person borrowed from a friend 9% PA, a sum of rupees 2000 on 1st October 2021. This is one difficult line which is mentioned in this question. Okay, remaining things are common like the previous sum. Okay, you are having two information. With these two information, you will prepare two statement of affairs to take out two capital, means one opening capital you will be getting by this, and this one, from this you will get closing capital. Okay, while calculating closing capital, you have to keep this line, okay, in mind. Okay, he has borrowed from friend 9% per annum, 2000 rupees. Interest has not been paid, means that is outstanding interest, which is the liability. In liability side, you have to also write outstanding interest, and a loan of rupees 2000 which you have taken from a friend, that will be shown in the liability side as an liability. Okay, in statement of affairs as at 31st March 2022. Okay, the shopkeeper withdrew 250 per month, means his drawing will be how much? Per month 250 rupees he is taking. So drawing will be 12 into 250, that is near about 3000 rupees. Okay, so here I have started the sum. Okay, sum number 10. Calculation of opening capital. I have prepared statement of affairs as on 1st April 2021. Okay, capital was cash was given in the question 600, sundry debtors 6800, stock 5900, furniture 1500. Bills payable is 1500, sundry credit is 2000. So by adding all the asset side, you will be placing that amount in both the sides. Then you will be subtracting this amount from this. You will be getting the capital balancing figure. Now this is statement of affairs as at 31st March 2022 to take out the closing capital, means capital at the end of the year. Cash was given 700. Sundry debtor, you have to less decrease provision for doubtful debt from sundry debtor, that is 680 is coming. Stock 8700, furniture 1350. Loan, it was mentioned that the person has taken loan from his friend 2000 rupees. Bills payable 1100, sundry creditors 1800. This is outstanding interest. It was mentioned in the question, the loan of 2000 was taken on 1st October 2021. So when you're taking a loan on 1st October 2021, so for 6 months, means October, November, December, January, February, March, 6 months interest is due. Okay, you have to give 6 months interest to the person from whom you have taken the loan. The interest you have not paid yet, means that is what outstanding interest, which is an liability. The outstanding interest you have to show in the liability. How you will calculate this amount? Loan amount into rate. Interest rate is 9%, 9 by 100, and the time period is 6 months, 6 by 12. So after calculating this, you are getting 90 rupees. Okay, again same process, add this, write both the side, this one subtract from all the liabilities amount, you will get the balancing figure of capital, that is 11840. After getting closing capital, you have to prepare statement of profit and loss, okay, which is the vital thing of the chapter. Capital at the end of the year is 11840. Drawings 250 into 12, 3000 rupees. Okay, 250 rupees per month he was drawing, means 12 months, 250 into 12, 3000. You are getting 14840. Additional capital introduced in the sum 0, nothing. Less capital in the beginning. In the beginning, how much capital is there? Okay, capital in the beginning of the year we have taken out from the statement of affairs, that is 11300. These two if you subtract, you are getting 3540 net profit for the year. Okay, so these were few sums from the chapter, 4 sums from the chapter. In all the sums you have, I think you found common things, such as you have to prepare statement of affairs for getting the capital, opening capital or closing capital, and after getting opening capital and closing capital, simply you have to make this statement of profit and loss format, and you have to just place the values and you'll get the net profit or net loss for the sum. I think this was very easy.